Hi Sonal, how are you?
Sir, I'm fine. How are you, sir?
I'm doing very well. Please brief me about your candidature.
Hello, sir. Good evening. Thank you for giving me this opportunity. I was waiting for this opportunity from a long time. My name is Sonal Jain. I am a recently qualified cost and management accountant, and I am fortunate enough to experience my corporate life through articleship. I actually did my articleship from Akshay Kumar Sen and Company, which is a mid-sized firm in Jaipur. And during my articleship, I have exposed to indirect taxation, conceptual clarity of indices, costing. As far as my academic record is concerned, uh, I actually did my college from University of Rajasthan and my schooling from uh, Kendriya Vidyalaya. In my leisure time, I love to cook food as it is a therapeutic and stress relief activity for me. I feel refreshed while cooking, and it is also helping me in my weight loss journey. I sometimes play badminton also. And speaking of my family, my father is a businessman and my mother is a homemaker. I have an elder brother who is working in a bank, and that's all from me.
Okay, great. How was your articleship exposure? What assignments did you handle, and what sort of clients did you handle in articleship?
I handled clients relating to GST compliances,
Hmm.
where most of the clients there were queries regarding the availment of input tax credit, the tax planning, what are the effective tax planning methods, and
Hmm.
I also assisted the management in some of the areas of internal auditing, and that's all.
Okay, and what sectors did you handle? Like, what sort of clients did you handle? Like, were they pertain to textile industry or gems and jewelry, or like what sectors did they represent? Your clients?
Food and beverages, food and
Food and
beverages.
beverages. Okay. So were they traders or manufacturers?
They were manufacturers.
They were manufacturers. Okay, great.
Or they were manufacturers of organic salt, sugar,
Hmm.
and
Okay.
spices,
Hmm.
pulses, etc.
So what's the GST rate applicable on spices, sugars, and all these things? What is the GST rate applicable?
18%, I think.
18%. Are you sure?
No, sir, I don't sure. I'm not sure.
No, no, no problem. No problem. Okay. So I can see that you have done a variety of assignments, in these 6 months time.
Yes.
Okay. Uh, so you have mentioned bank reconciliation statement. So how do you used to prepare bank reconciliation statements? How do you prepare bank reconciliation?
Sir, I prepared bank reconciliation statement as per the what bank balance showing, company's bank balance showing, and what company is maintaining records in their company. Like if there is a difference between the company's record and the bank balance, then I was the what are the what are the points where the difference arises, what are the
Hmm.
points because of that the difference arises. So bank
Okay.
reconciliation statement used for that.
Okay.
uh,
So
for
what
ex-
were
uh,
predominantly, yeah, what were the predominant reasons for the differences?
the interest charges, interest,
Hmm.
like in bank balance interest is credited, but in companies financial records it is not accounted for,
Hmm.
or the check is deposited by the company which is they credited in their own records, but the same is not uh, accounted for in the bank balances because
Hmm.
it is not submitted to the bank,
Hmm. Okay. But
or the
nowadays,
bank
not
charges.
many companies, issues checks. So, can there be another reason for the same? Can there be other reasons for the same?
RTGS or NEFT,
Hmm.
the time difference between
Hmm. Hmm.
there might impact the both the
Good.
might impact both the accounts.
Okay, great. So let's say if I have hundreds of accounts, like I have 103 accounts. I have a big unit. I have offices across different cities, and for every city, we have a bank account, and we are sitting in, let's say, headquarters or regional office. So do we need to make, or do that region or city has to make BRS for each and every bank account?
Yes, BRS is made for each and every bank
Bank
account.
account. Okay. And let's
Yes.
say there is no as a difference. The balance as per bank and the balance as per books is same, exactly the same.
Then there is no
Still,
need to make.
there's no need. Are you sure?
Yes, sir. Yes, sir.
Okay, fine. So since you said that you have worked in GST,
Yes.
what's the due date of filing of 3B in Rajasthan?
20th of the next month.
20th. Is it 20th or is it 22nd in Rajasthan?
The 20th.
20th. Okay. Are you aware about the QRMP scheme that has been introduced recently
No, sir.
in GST? QRMP scheme?
No,
No?
sir.
Okay. Okay. And do you have any idea about e-invoicing norms?
Yes, I
Yeah.
have.
Yeah. Please guide me through the norms introduced.
Uh, five. If a transaction exceeding 5 crore, then e-invoice is required to be submitted.
5 crores. Is the limit 5 crores?
Yes, sir.
Okay. Or is it 10 crores?
5 crores.
Okay. Let's say if I'm exporting goods, you know, to it's a B2C transaction and I'm exporting goods to some other country. Should I still, can I still go for this? Do I still need to issue invoices?
Yes, sir. E-invoice is required required to issue.
Here it is required to issue invoices, even if I'm exporting. Okay, no problem. So you have mentioned that you have identified block credits availed by the clients under Section 17(5). So what were those block credits like that you identified for the clients?
Sir, clients has taken ITC on the goods and services which he used as a gift, or
Mm,
disposed of as a gift, or
mm,
those goods and services which are theft, or which are damaged, or which are lost. So they
mm,
are, these services are these goods and services are blocked under ITC,
mm,
and they have availed the ITC. So I advise them to reverse the ITC on the same, because
mm.
these are blocked credits.
Okay. So let's say if I am spending some amount on CSR activities, and to carry out those CSR activities, I have bought certain goods or services on which I am paying GST. Can I take credit of the GST that I've paid? Can I take ITC for the same?
No, on CSR activity also ITC is blocked. ITC cannot avail on CSR activities also.
So is it a new amendment or was it blocked earlier as well?
It is blocked earlier as well.
It was blocked earlier. Okay. And let's say now the company, you are hired by our organization and we are getting your insurance done. And on that insurance premium amount, we are paying GST as a company, which is like the company bearing, we are bearing that price, right? Can I claim credit for the same?
If it is a policy of if it is requirement of the law, then ITC can be claimed. Otherwise, ITC cannot be claimed.
Okay, good. So where do you see yourself 5 years down the line, Sonal?
I see a long association with the organization and I see myself somewhere in mid managerial position, uh, handling a professionals who will help me to who will help me to uh, who will help me to achieve organization goals and objectives. And I will be someone else who will bridge the gap between the top level management and the person working with me. And I will be handling clients. I will be leading a team of enthusiastic professionals, and I will. And apart from that, personally speaking, I want to attain. I would like to obtain the financial freedom for myself. And apart from good professional, I would like to be remembered as a good human being.
Nice. Okay, great. So you mentioned India 16. So were your clients AS compliant clients?
Yes,
All your clients were India's compliant, sorry. Were your clients India's compliant clients?
yes. The clients were at India's compliances.
Okay, okay, fine. So what is the basic threshold or the eligibility criteria for becoming India's applicable client? Like when do we need to apply India's? What is the threshold?
Sir, I'm not able to recall it right now.
Okay. So you mentioned India 16, which is basically fixed asset. So are you aware of the concept of component accounting? What is component
Yes,
accounting?
the component accounting. For example, if we purchased a car, and the car and the engine, uh, these are the two. Uh, these are the two items, and these are the two products. And if life of the both the products are same, then we can depreciate both the amount, both in a single amount. And if the life of the machine, if life of the car and life of the engine both are the different, then we depreciate both separately.
So it basically depends on the life of the asset, right?
Yes, life of the
Or is
asset.
there any other criteria also along with life? So
I
life is
don't.
one, and is there any other criteria too
I'm
along with
not
life? No. Okay.
not able to recall it.
So what's your biggest strength, Sonal? What makes you different from other candidates?
uh, I'm adaptable to new learnings.
Hmm.
As during articleship also, in starting I was not aware, or I'm not able to deal with the clients. But due to because of that, in starting I was
Hmm. Say something, anything. Complete a sentence at least.
uh, I am adaptable to new learnings. And during my articleship also, initially I was not able to deal with the clients, but after some time I was able to deal with the clients, and I was able to deal with them.
Okay, great. So what are the methods prescribed by the company law for charging depreciation on different assets?
There are three methods. The first one is straight line method, which is charged equally every year. And the second one is WD method, which is charged in a diminishing method. And the third one is unit of production basis.
Okay. So let's say if I'm using my production unit, machines of my production unit in three shift, right? I have a three shift working in my factory. So can I claim additional depreciation on the same under Companies Act?
In income tax, additional depreciation can be claimed, but in Companies Act, additional depreciation cannot be claimed.
Okay. Are you sure with this fact that we cannot claim additional depreciation?
Yes, sir.
Okay, so does Schedule 2 prescribes the rate of depreciation, or does it prescribe something else?
I am not able to recall it.
So let's say, assume that it prescribes, the useful life of the asset. Assume that Schedule 2 prescribes the useful life of the asset. And let's say the management wants to deviate from, taking that particular useful life for depreciating their asset. How can they disclose it in the books of accounts? Like, how can they disclose it in the financial statements?
In notes to accounts,
Hmm. Like, what are they going to write? Let's say if we ask you to draft a note on this, what can they write?
I don't know.
Okay, no problem. Moving ahead. So Sonal, you come from Jaipur. You come from Rajasthan. Why did you file for Mumbai as a location? Will you be able to relocate to this particular city, or is any of your relatives or friends stay here in Mumbai?
Yes, my brother lives there, and I also completed my CMA course from there only. Like I
Hmm.
have taken classes from Mumbai, and
Hmm.
I am ready to relocate because I will be if I uh, in different city I will be able to learn more because I will deal with the different professionals in of different cultures,
Hmm.
and I will be able to learn more from them.
Okay. Okay. Fine. I can see that you have worked in costing division as well. So is it a cost accounting firm? Akshay Kumar Sen and Company. Is it a cost accounting firm?
Yes, it is a cost management accountant.
Okay, it's a cost accounting firm. Okay. So what could be the possible reasons for difference between costing profits and financial profits?
Uh, so depreciation
Hmm.
or in accounts in accounts let's say depreciation is 4 lakh, or in in income tax depreciation is
No, no,
5 lakh.
ma'am, I'm not talking about income tax. Just financial records and costing records. What could be the possible reasons for difference in costing profits and financial profits?
In financial records, in costing records, interest on finance costs is not included in costing.
Hmm.
uh, Interest on income, interest on capital, and any kind of donation, any kind of withdrawal from any kind of drawings is not included in the costing records, which are recorded in the financial records.
But
So
drawings are
these
not considered in financial records as well. Drawings are also not charged against profits.
dividend,
Okay. Dividend. Okay,
dividend
fine. Dividend
depreciation,
depreciation.
rent.
Okay. Rent.
These are shown in the financial records, and these are not recorded in the cost records, because in cost records only uh, those items are recorded which are related to the cost of a particular product or services.
Okay. So assume that, the actual cost is 100 rupees and the standard cost is 120 rupees, right? And on deeper assessment or a more stringent assessment, we came to know that it is because of the efficiency variances, right? What possibly could go wrong that the actual cost is lower than the standard cost if it is a efficiency variance?
I am not able to recall it, sir.
Okay, fine. So what's the due date of, depositing TDS in government's account? And what's the due date of filing returns under TDS now, or TDS regime, income
10th,
tax?
10th of the next month
10th of the next month is what, ma'am?
is the TDS date of, it is the date of filing TDS.
10th of next month.
Yes.
Okay. Are you sure?
Yes, sir.
But I think TDS returns are filed quarterly. So it is basically, 15th of the month subsequent to that quarter, when that
Quarter.
quarter ends. And when's the due date of paying tax to the government? Okay, no problem. So are you aware of recent or one of the TDS section that has been introduced recently, which is 194R? What it is all about and what is the tax rate at which TDS has to be deducted? No. Okay, you can't recall. Fine. So let's say there's a consumer or there's a customer or a client coming to you for advice, and they're asking whether we should go for regular scheme in GST or whether we should go for composition scheme, right? What factors will you analyze before advising that?
Uh, First will be the annual turnover. If the
Assume that
person's annual,
assume that it is the client is eligible to opt for composition scheme. All the conditions are getting fulfilled. Assume that. Now, other than the eligibility criteria, what factors will you analyze? The business criteria.
sir, if client's turnover is not exceeding 1.5 crore, then I will advise them to opt for composition scheme. And if on the basis of compliance requirement also, clients if the clients dealing in those goods and services or those activities which require multiple registration or the requirements, then I will suggest them the regular scheme, because regular scheme is a centralized scheme, which will be easy for them. And the nature of the goods and services also, because if in composition scheme, those supplier who are supplying goods interstate, or who are supplying goods through ECO, or who are in NRTP or CTP, they are not eligible to opt for composition scheme. So if they are supplying those goods and services, then I will suggest them to choose a regular scheme.
Okay, great, nice. So are you aware of recent changes that have been brought in Schedule 3 norms?
Sir, I know some amendments only, not most of them.
Okay, just guide me through a few important ones.
Uh, in case in place of turnover,
Hmm.
total income is
No, not these
the
ones, not the name change ones. Few important ones.
uh, sir, I haven't read it
Okay,
properly
fine.
or whole.
Okay, fine, no problem. Assume that there's a company where there is no revenue, no expenses, just assets. There are assets and nothing else, right? And those assets are depreciable assets. The assets are ready to use, hence the company is depreciating those assets. How will the P&L and balance sheet will look like in this case? If there is no revenue, no expenditure, just assets and depreciation.
The in P&L depreciation will be
Hmm.
debited, and in balance sheet fixed assets are recorded in asset side.
No, just make a P&L and balance sheet. Like what will come? Okay, we'll charge depreciation in the debit side. What will be like? How will you balance P&L account there? The debit credit side needs to balance, right?
Yes.
So
uh,
if there is like, how will you balance both the statements?
the the balance amount in the if assets are disposing of,
Hmm.
then also
No, no,
both
we
the
are not
sides can be
disposing.
matched.
No, we are not disposing the assets. There is an asset available with us. It's a pre-revenue company. We are not earning anything. It's a manufacturing unit. We have not yet started producing or selling at least. We are still in the testing phase. But those assets are good enough to be depreciated. They are ready to use. They are in use. How will the P&L and balance sheet will look like? Think and then answer.
If the assets are taken on if the fixed assets were taken on credit, so the remaining amount
No, we
will
own
be
the asset. No, no,
the
there's
creditors.
no. It's a owned asset. We have already paid off everything. The asset was assume the asset was bought 2 years back. Now we are just depreciating the asset. Okay, no problem. Moving ahead. Uh, so what is the difference between the erstwhile accounting standard 9 and the current Ind AS 115 on revenue?
uh, I don't know the difference between both the Ind AS and AS,
Hmm,
but I
okay.
know the accounting of revenue, like how revenue is recognized, what are the five
Hmm,
parameters.
hmm,
The first one is identifying the contract with the customer,
hmm,
uh, like both the parties have entered into the contract for the goods and services for use in the
hmm,
for goods and services. The payment terms are identified or not. The agreement agreement either orally or written, either orally or in written form, or then identifying the performance obligation, like there is a distinct goods, the goods are distinct, or the like there is a single performance obligation, or two different performance obligation. Then determine the transaction price, like what will the transaction price of the goods and services, the fixed price and the variable price. Variable price may be based on the expected value method, or like most likely method. And then allocate the transaction price to the performance obligation. The transaction price will be allocated uh, as per the as per the standalone selling price, and then recognize the revenue on the performance obligation.
Okay, great. So can there be a difference between consideration received and transaction price?
Yes, there
What
can be a
about?
difference, as transaction price is uh, transaction price is total transaction price, including cash consideration, non-cash consideration, or uh, consideration form of exchange.
Hmm. Okay.
And
Anything else?
yes, sir.
Okay. What are the exemptions available in Indes 116 to the lessee?
Uh, if the if the contract is for only 1 year,
Hmm.
12 month or 1 year, or if the asset is low value, then
Hmm.
lessee is not required to apply in this 116.
Okay, great. So let's say you have hired a, you know, anything. You've hired a machine, or maybe, yeah, a machine from one of your vendors, and the vendor is actually changing machine every day, as per their requirement, and you are paying rent to hire that particular machine to the vendor. Is it a lease transaction?
If that if the asset is identified,
Hmm.
like if the same machine is used,
Hmm.
then it will be a lease contract. And if the lessee is able to have future economic benefit uh, from that machine, then it is a lease contract.
So in this case, do we have a identified asset?
Yes, the machine,
But the
uh,
fact says that the machine is being changed by the vendor whenever they require.
then it is not a lease,
Okay.
because for a lease, the asset should be identified.
Hmm. And what are those conditions where we can determine whether the particular asset is identified or not?
If future economic benefit is received to the lessee or not, and the lessee has the right to direct the use of the asset.
Hmm.
These are the conditions.
Okay. So let's say I've deposited or I've paid some, uh, you know, let's say there's a liability to pay. I'm taking a house on rent, on lease, and I have a liability to pay house rent. Oh, sorry, house rent. nahi. I'm really sorry. I have a liability to pay house tax on the same, right? Will you include this house tax amount while computing lease liability?
I don't know, sir.
Okay. Okay, fine. Assume that you are just looking at a P&L and balance sheet where you are able to find out that in the balance sheet, the lease liability amount is going up. It is increasing from the previous year, right? And the finance cost, when you are looking at the P&L statement, the finance cost is coming down. It has reduced. What could be the possible reasons for the same?
Value of the might be value of the value is decreasing of that particular.
Okay, think and answer. Take your time and answer. What can impact the finance cost? What all is included in the finance cost?
I'm not able to
Okay.
call it.
So let's say certain ESOP rights have been given to employees that they can avail, they can, get shares and they can avail this particular option. So assume that we are working for a startup where they are offering you ESOP rights, that after 2 years you can exercise those rights. Whether these ESOPs can be categorized as financial liability, or is it a compound financial instrument, or what is it?
These will be classified as financial liabilities
Hmm.
because after 2 years, these will be uh, the ESOPs will be used by the employees.
Hmm.
So there
So what criteria do you check, whether for checking, what criteria do you assess while determining whether a particular liability is a financial liability or not?
I don't know.
Okay. Since you've done a lot of work in GST, so assume that I'm taking some services from your entity or buying certain goods from your entity, and I bought those goods and services in December 2023, right? And I've not paid that amount to you for next 1 year, till December 2024. So once my auditor, so um, basically my organization is undergoing audit. So even the tax auditors, stat auditors, and GST auditors, all of them are pointing out that there is one particular vendor, Sonal, whose bill is still pending from last 1 year. And my GST auditor is telling me that if you pay off this bill, you can claim credit, ITC, for the same. Now, as a consultant, do you also feel the same way? Can I claim credit post payment of this particular bill?
No, I can like you cannot claim the credit on that because the ITC can be claimed on tax paying document like invoice. If
I have the invoice. I have the invoice. I have invoice. You have already issued invoice to me. I have invoice, but I've not just paid the money. That's all.
but if you haven't paid the consideration to the supplier within 180 days, then
Hmm.
ITC will not be availed by them, availed by
But
you.
it says that once you pay it off, you can claim the credit. That 16 to proviso says that if you're not paid the amount till 180 days, you have to reverse the credit if you have taken.
Reverse the credit,
Right. And once you pay it off, you can take the credit back
but with
along with, and you
interest.
have to pay with interest. Right. Now here, I am paying it to you. That is obviously after 180 days, right? Because it's been a year now.
It's been
I am ready to pay interest too. I have no problem paying interest as well for 1 year. But still, under law, under GST law, can I claim credit for the same?
uh, ITC can be availed uh, which due date of annual return or the date and the due date of September month next financial year, September month of
Hmm.
financial year, whichever is earlier. After that, no ITC can be taken.
So in this case, can
So
I take
here,
ITC?
Yes, in this case, ITC can be taken
Uh, but just now you said
in
that,
December.
I mean, before the due
Due
date,
date of annual return or
what is that due date?
October?
But I'm paying you in December, so can I still claim the credit?
No, you can't claim the.
Okay, you just now said that you can.
No, no, you cannot claim the
I cannot claim it. Okay,
credit.
fine. Okay, fine. So Sonal, you have mentioned that you have prepared financial statements as per Schedule 3. So what all things did you handle while preparing books of accounts? Which all accounts did you handle? Or what all did while preparing books of accounts as per Schedule 3?
Profit and loss account, cash flow, balance sheet.
Hmm.
I have prepared these as per schedule third of the Companies Act
Hmm.
2013.
Hmm. Hmm. So did you handle any specific line items, or were you preparing the whole balance sheet, P&L, everything?
Uh, in balance sheet, I was handling the fixed assets
Hmm.
and the current assets only.
Okay. Okay.
And
That's all. Nothing in P&L.
no, nothing in P&L.
Okay.
The depreciation in P&L.
So assume that you are being entrusted with one responsibility by the management, that you have to do physical verification of the stock lying in the warehouse, right? They have provided some details to you, which has been recorded in their books, SAP or ERP system, Oracle, Dynamics, whatever system they use, or some customized ERP. That this is the name of the inventory or the item of the inventory. These many quantities are available in warehouse, and this is the location where it is available. Now, while doing the physical verification, you were able to find out that uh, few inventory items were more in number than what is being displayed or what is being recorded in the books, right? So in physical verification, there was more inventory available in the warehouse than what was recorded in the books. What could be the possible reasons for the same?
Error of omission, that
Okay.
some inventories are not accounted for in the financial statements,
Hmm.
and or some inventories might be purchased. Some inventories are new,
Hmm.
so these are also not accounted for in the financial statements. These
Hmm.
are the
Hmm.
reasons of the differences.
Can there be a few other reasons?
Yeah, there are other reasons also, but I
Hmm.
don't know those reasons.
So, what could be the possible risk associated to procurement's process? Any five risks associated to procurement's process? If you want, we can skip this part if you have not read internal knowledge.
No,
Fine.
skip this part.
Okay, fine. So, have you practically worked on SAP?
No, I don't work. I haven't worked practically on SAP, but
Hmm.
I have theoretical knowledge
Hmm.
on
Okay.
SAP because it was a 1 month course,
Hmm.
1 month course which is conducted by the CM Institute.
So, did you attend that course?
Yes, I attend that course.
So, what did you learn in that particular course?
Don't remember it right now.
Okay,
I will.
fine. So, how would you rate yourself, in Excel? How much are you going to rate yourself in Excel?
Uh, Excel is a detailed tool. One cannot understand it properly, entirely.
Hmm.
Uh, I I rate myself somewhere around 7.
Hmm. So
because I
what all
know
formulas do you use? Yeah, right. Go ahead.
uh, the VLOOKUP, SUMIF, uh, pivot table.
Hmm.
These are the basic formulas which are used in
Hmm.
which are used in the corporate life, and
Hmm.
uh, I also know some sort of shortcuts which are useful in accountings.
Okay, fine. Okay, Sonal, that's all from our side. Do you have any questions?
What will be the my is there any training module or training facility for the
Hmm.
new professionals who will join?
No, we actually do not have any training program as such. You will probably be learning by doing. That is, there's a on-the-job training program. You will be
Okay.
uh, will be associating you, or will be putting you under some experience, you know, experienced professional, or the people who are working already in the firm, and you might have to work with them for few months in different departments. And I'm sure that you'll learn uh, by practically experiencing what they're doing. Any other question?
No, sir.
Thank you, Sonal. We'll get back to you.
Yes, sir. Thank you.